Tesla drops another 25 points to 639 on the low today. And the question is, what's going on? And what happened to our 3-day rule love fest that should be happening by now? This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy our show, please take time to like and subscribe. So, we also want to encourage you to be part of our community to learn and grow together. So this weekend we did a show that was really looking at what's happening with puts and calls and how those put calls and their ratios kind of shape the week. One of the things that we pointed out that was strange is that there's a group of puts that have been purchased at the 600 level that seems strange because there are 10,000 of them that were purchased. It's like, how can we be at 600 when Tesla's heading for 700 and people are buying huge quantities of those? So as I've watched Tesla's stock price fall after very good numbers we discussed, and in general positive analyst comments, the question is kind of, what the heck is going on here and where are we headed for next? And I'd have to say that there are three logic lines that I'd like to pursue. One is kind of the 3-day rule, how and why we came up with that, and what we're expecting from it. The second thing we wanted to review is the fact that there's a whole look at how options line up based on where we are now for the rest of the week. And we kind of wanted to go through that. And then finally, sort of conclusions based on A and B. So the first thing we wanted to review is I got a note this morning from one of our Patreon supporters regarding, hey, what's the situation with the 3-day rule and when does it kick in? What we typically have is about the third business day after a major announcement by a company is when you see what the market really thinks about where the company is. So in this case, 3 business days from Friday would start sort of today, Wednesday, into Thursday and go from there. Now, there are a whole bunch of parameters to the 3-day rule that we've thrown out over time. I just want to cover a few of them as a reminder to those who are regulars as well as newbies. And a few items are, number one, dollar cost averaging. So the institutions will start buying, we believe, on either the third or fourth day of the 3-day rule, and then they'll do what's called dollar cost averaging, which means that if you have institutions that all buy on the same day, they end up forcing the price up and having to pay more for those assets, which they're not likely to do. So we have a natural group of start to buy buyers at that point, which is sort of, if not today, tomorrow, the definition of how this whole process works in our mind. The second component of this is, or there's a whole bunch of components of the 3-day rule. As we discussed, the whole concept behind it is that, let's say you have a company, in this case Tesla, have a major announcement, in this case what production numbers were, and we'll see the same thing when we come up to the earnings. Well, there's going to be a process where, sort of on a human level, it would be that, let's say there are 30 analysts or so that cover Tesla that are from decent-sized firms. Now, those analysts are being paid either by hedge funds or institutions for that research. So what they'll do is sort of build a model, have their sense of what they're forecasting numbers to be, and then once they have real numbers to plug in for those gaps, those models can adjust things like, well, what's the growth rate? What's their likely profit margin? How are both moving? What's demand for their vehicle looking like based on production? So there's all these data points that one can spin off of what just came out on last Friday. Now, what then happens, so you have the analysts sort of redoing their models to determine what the new data means. In our minds, that usually takes about 1 business day, maybe 2, for them to truly review all the numbers, make sure they're straight. The next part of the process is, and there could be people who get there really fast, but others who have more respect who get there slowly, So once we get to that number, the next step in the process is now uh, what what is that looking like? So today, as I was thinking about doing a show about the 3-day rule, one of the training elements for me as an analyst was that I worked at Forbes magazine in New York. And I was 17 at the time, or 18 at the time, and doing a summer internship. And as you probably know, Forbes, if you read the magazine, will feature different analysts. So if there's a story they write, let's say about Tesla, they'll have quotes in there from different analysts that give their perspective on what's going on. And those quotes come from the fact that you have writers who read the reports produced by these analysts, and they tend to sort of generate a relationship with certain analysts. And one of the funniest experiences I had as an intern was going into the office of one of the Forbes editors, and he had, this is a gentleman in his late 50s, early 60s, and on his desk, he had about 2 feet deep worth of analyst reports that had been sent to him. And I looked at his desk and I was thinking, how in the world does he find anything? Because other than the reports being there, you couldn't tell. It was just a giant stack of paper about a foot deep with all these open reports from analysts. And I was just like, man, that just looks brutal. But he had his organization system that was unique to him. But it highlighted to me the fact that when you're trying to do a good job as a consumer of those reports, you got to consume a lot of them. So a place like, let's take Fidelity, for example, very big fund. What Fidelity can do is they can say, look, give me the top 10 analysts on Tesla, and I want their research in my hands within 24 hours of close of business in terms of new big information hitting. You could say, I want it instantly. If you want to pay more, you could say, take your time. I'll give you a couple of days. So now, let's say for giggles, that $1 million or $2 million for those reports is split among 3 or 4 firms by Fidelity. And they can use that research across a number of funds that have different entities they have to invest in, like big cap growth is one fund that they might have. There's technology growth, another fund that might be out there. So you see how you might have analysts that are in charge of different funds that would be basically using the same information so they can afford to pool. And in this pooling process, you end up with them running their own models as well. And they're saying, oh, you know, sort of what are these guys saying, and then what do we do with it? Now, I really believe that at Stanford Business School, one of the things that they teach about is the fact that when people hire consultants, the goal of the consultant is not to tell them stuff they don't know, it's to validate the choices they already made by the fact that you have consultants doing it. So the analysts or managers at these funds are basically saying, hey, this is what our model is saying Tesla's doing and why. What is your model saying? Is there anything that's coming out from you guys that's different that we already have in-house based on our ability to analyze Tesla's stuff? And the answer is, they already know what they're going to do, but they're paying for the research. Why? CYA. The point is that you make $3 to $5 million a year. So you've got a choice. A, just make the call yourself and be quick about it the way the hedge funds do it. Or B, split the research costs for your fund to talk to several different analysts that allow you to view Tesla perhaps from unique perspectives that make you a better reviewer of that investment potentially. So the answer is that, hey, I'm an A student from an Ivy League school. We do research, meaning we read a lot of stuff. So if somebody comes back to you and say, this didn't work out, what you're going to do is whip out 4 or 5 reports and say, we did make this decision, but it wasn't taken lightly. And that's how you not only keep your job when things don't go well, but you get paid more because the basis of what you did was on core, solid research. So I wanted to kind of drag you through the mud of this, because what then happens is that, let's say you pick 4 or 5 analysts that you really like, you're paying them, and they hand you their report they could do it within 24 hours. Let's say it's within 48 hours. That could be 10 hours, it could be 48 hours. What then happens is that for all the managers impacted by that research, they all read and then start firing emails, firing a meeting session to figure out, well, wait a second, is there anything we're missing? Do we A, increase our position, B, maintain our position, or C, reduce our position in this stock based on what we've been able to glean from what's going on? And so the answer to that question is what I believe we start seeing on day 3, because they're able to have that meeting either day 2 or day 3. And then what happens is they'll send the instructions buy, sell, or hold to their trading team, and that trading team will do things like split the trades among different firms, come up with a buy schedule, let's say, that reflects their sense of what they're going to do. And this will start, you'll see this play out. In the old days, of a year ago, we used to see this play out in 2 or 3 days right after the 3-day rule started. What started to happen is our 3-day rule has seemed to be getting extended into this 1 to 2 week rule. And this is not unexpected, and the reason is because when you buy a large number of shares, your purchase actually moves the price up or down, depending on if more people are selling than buying. And so therefore, the no-brainer, we make money on a 3-day rule plan has kind of got blown up, because all of a sudden we see people now extending that buying activity over a longer time space. And by the way, it could be buy or sell. So that's in general sort of a generalistic review of our 3-day rule process and how things work. Now, let's look at application here this week. So we have a lot of good friends that watch us a lot, and we appreciate your support both on Patreon as well as viewership and likes, etc. I want to remind you to please consider doing so. So what's actually going on right now is, I want to say, conflicting data points. So for example, we reviewed this week that there are certain people buying 840 calls on Tesla that expire this Friday, the 9th of July, 2021. The other thing that we listed was that, guess what? There are actually people that were buying 600 puts in large numbers. In fact, one of the largest numbers on the board. And so, in essence, in my mind, what this meant is that, hey, there's some people, a lot of people, who are saying Tesla stock price is going to 600 this week. And they're confident either it's going to get there or they're going to help it to get there. Something is going to happen, or something is going to have to give. Now, the further part of our conclusion for this week is the fact that if you look at the pre-week and even now trends, look at this. So from an option standpoint, I would look at this is to say, hey, let's bring up the option string for Tesla. Just go to Yahoo, Finance, Tesla, and then to the options, and then look down the option string. And what you want to look for is within 100 points of where the stock price is at, where are we in terms of large numbers of puts or calls? And so the answer you'll come up with is kind of what we came up with over the weekend, which is there's a ton of people that are hoping, expecting for it to cross 700, and then 690, 680, all these numbers are targets with large numbers of people purchasing call options in that space. The ratios are insane. We reviewed already 700 level. An example of it is that we had like 10,000 calls over the weekend at 700 and 1,200 puts at that price point. So what this meant is that, and one of our conclusions was that, yes, the stock price should be up, but there are so many people loaded up for Tesla to rise that it's the perfect, what we call screw-logical process for Tesla's shares. Why? Because, as we've discussed numerous times, the way I developed my option strategy was I only did it maybe 50 times, starting about 25 years ago, might have been 100, where I was sitting there going, wow, earnings good, company good, Options expiring this Friday. All I got to do is pick up a couple of calls, make a little money, everything's fine. And then I went through this process maybe, call it 30, 50, might have been 100 times. And that's how I developed my screw you plan that the market makers would do, which is that you're trying to make money from a good company's fundamentals and buying a few calls to see if you can make some money overnight on it. But what they're doing is trying to figure out a way to make money off of make sure you don't earn anything. And so the logic or the core, if you will, kernel of all this is just the fact that, oh, wait a second, I'm just trying to make money on the direction of a well-structured company that's making money for its investors. You guys have me as a target because you see me putting money out there trying to get this done. And if my calls expire worthless, you make money as a market maker. So there's a conflict of direction. So the last major comment I made over the weekend, and it seems to be playing out, and I was hoping it would not play out, is that instead of us getting a burst right now for Tesla's stock price upwards, what the market makers are saying is, hey, we know what you guys are trying to do, which is make money off of the increasing value and the better story Tesla has. But that story might happen over a longer period, a couple of weeks, a few months. But we have the capability to make sure all of you guys lose a lot of money trying to execute your vision. And so I'd have to say that I'm very disappointed to see this happening, because I was hoping that we'd see enough institutions with large dollars to start entering now so that we wouldn't have to worry about this screwological process being what actually occurs. And I'd have to say that, that has not been happening, and stock is getting killed. And so the question mark is like, where are we? Where do we end up on Friday would be an excellent question. And the answer I'm coming up with is, man, those 10,000 puts at 600 seem to be sucking the stock price towards it in a weird sort of way. Another sort of left field data point I use is there's a guy named Squawk Square, and he actually did a piece where they were like, Tesla's not following other tech stocks, it's not following S&P, it's not following all these different metrics that a bunch of other stocks are following, and that's why I think that we're really in the screwological process, which is how many of those call owners can we screw? So what does this say about where we're going by Friday? Well, frankly, as you know, we could go all the way back to 700, 775, 760, any of those numbers, but the problem is there are a whole bunch of calls at all these numbers where people were hoping for a rising stock price. And the market makers knew that they could gang up and create a disaster where all those call options lose their money and the institutions make a ton of cash in the process. So I really think that this is a positive story for Tesla. We move north from here, but I have to say that I really think that all the data we're seeing suggests that the call put imbalance that we saw over the weekend in terms of what was going on is playing out to the letter. Am I happy? Absolutely not, because I just had, a call or two there hoping that we would see that 700 for sure. But again, part of this process is recognize what the deal is and decide what you're going to do. So for example, one of the trading lessons given to me by one of my buddies is the idea of find out where the law is and get on the right side of the law. So if you're a call owner and you've decided, yes, this baby is coming back, that's not bad. The problem you have is the right side of the law right now is on the put side. So either you get on the put side, you lose a lot of money, or you just hang on to your calls, hope for the best, and just eat the loss that will be handed to you by the market makers. So I think this is a very, very tough pill. I'm very disappointed about this, but I definitely think it's the reality of what we're facing this week. And what really sucks is when the same things you had purchased in a short-term goal all of a sudden is profitable over a longer period of time. And you're like, if I had only hung out for that longer period of time. So there's new data that's sort of emerged on Tesla and trading, et cetera, and that is that after the S&P, very weird things have been happening like this, where what happens over a 2-week period used to happen in 24 hours, 48 hours. You could make your money and leave, and we're not getting that. So I think it's unfortunate, but and I have to say, what I like about this is that you're kind of forewarned in terms of our show, and this is one of the reasons you want to try to watch our shows on the weekend for the preview reviews, because it can really help you frame the week and be, ready for what might occur for that week. And we definitely had this as part of, the scenario, given how big those put positions were in that 600 number. Any rate, we really look forward to constructive comments. Don't forget we have a few SpaceX shares. You can hit us up on Teslafaninsight on Facebook regarding that. I think it's unfortunate, but hopefully we see the miracle of the recovery. But there's just so much money for the market makers to make, depressing the stock for a certain period of time to sort of clear out the newbies, if you will. So we'll see what happens, but I keep my fingers crossed because I want it to go up. But obviously we're seeing where it goes, A, and B, we understand why it's going in that direction, primarily because I think the fundamentals of the company are solid. And so it's, I believe, a trading situation that we're seeing. Anyway, thank you again for joining us. This is our health component. Don't forget, prior to lovemaking, salad or something very small facilitates not having all your blood flow to your stomach. It goes to other extremities. Also want to encourage you to consider not going to bed within 4 hours of eating, minimum 2 to let the food digest prior so you don't get acid reflux or a cancer in the upper respiratory area. And then the rest of our list for now is below for you to take a look at. This is Greg for Teslafaninsight. Tschüss German, au revoir French, Lahith Road Hebrew, Khuda Hafiz Farsi Staraziche, Russian, Ni Hao Ma, Chinese, Konbanwa, Japanese, Hey Do, Swedish, G'day our friends in Australia, Namaste our friends in India, and we will be adding more languages to our list as I'm able to learn how to pronounce them properly and not look dumb. Thank you again for joining us, and we look forward to our next conversation.